What's up?
We didn't do the intro video. Hold on 1 second. I think we here now. Welcome back to the Daily Stack. I'm here alongside my co-host, Jody Flournoy, as well as Stefan Rust, the CEO and founder of Trueflation. The title is Inflation is a Lie. And a lot of people are probably wondering, what does that actually mean? Maybe you have heard of Trueflation, maybe you have not, but it is something 100% we are excited to talk about today, and something you should be paying attention to, because everything you've learned about thus far is somewhat of a lie, and we'll get into that here very shortly. Stefan, welcome to the Daily Stack. For those that don't know you, can you give a quick, brief intro? You were the former CEO of Bitcoin.com. You famously bought Bitcoin at $5, so very much an OG in the space, and plenty more. So please give us a quick introduction, and then we'll dive right into Trueflation.
Yeah, no, thanks for having me here. Glad to be here. Yeah, I'm a serial entrepreneur. Got into Bitcoin about 2012 for the first time, sort of by chance, really. We had a big developer agency. We were helping develop applications and recruit developers to build applications for technology-specific SDKs or platforms or app stores. And we were doing this on a global basis. And then one of the developers wanted to get paid and settled using Bitcoin. And this was back in 2012. And so I didn't think much of it, but luckily I learned about the Bitcoin J wallet, which was one of the first wallets, which had one of the worst user experiences you could ever sort of imagine, the early days of Bitcoin. But I did manage to actually buy some Bitcoin on eBay using PayPal. So it was like quite a different times back then. Yeah, but one thing led to the next. Settled up, some 9 months later with the developer, and it was instantaneously no fees from peer to peer using over a Skype call live, and it was just amazing. And that's what really got me hooked. We then started paying all our staff in Bitcoin. We gave everybody the option to, if you didn't want your salary in Bitcoin, you could have your expenses paid in Bitcoin. You could choose whichever way you wanted. Any developer working on any project could receive Bitcoin. And the idea was to bring about velocity of money, right? And so really, how do we try and take more in than we could invest out with the developers? One thing led to the next. I met Roger Veer, who had this URL called bitcoin.com. He wanted somebody to scale it. And so, I said I could do that. We scaled it to 20 million wallets, some 500,000 physical merchants where you could go and pay with your Bitcoin, your Ethereum, your Bitcoin Cash. But one thing we needed to read it was stablecoins. And so that's when we sort of launched stablecoins on the Bitcoin Cash rails. And that was something that really sort of, thanks to the velocity, we could do instant settlements, no fees. And if you think about inflation, credit card, how much is credit card contributing towards inflation? Every single transaction you do has a minimum 3% charge. Not just credit card, you layer on the point of sales device there, you layer on, the risk, you have a 30-day delay in receiving the money. So all of those elements, how did we sort of take that into account? That wasn't the genesis of Trueflation, though. The genesis was Jerome Powell and Janet Yellen telling us or berating us that inflation was transitory.
Yeah.
And that was like a red rag to a bull. And I just felt we needed to have a look at how they calculate it, realize they do it manually. It's aggregating the data once a month. It is pulling from surveys, 1,000 households that they survey. So all these different things. And if that's the competition and you believe Peter Thiel's book, 0 to 1, do better than 10x on that. And that's when sort of we launched Trueflation.
Yeah, I think
I think before getting in Trueflation side, I think the point you make that most people don't think about, and you really don't hear him talk about it that much, but it's the cost of payments is becoming just a driver of inflation itself. Like, why should you pay 3% on every credit card transaction? Why is that the norm? And most people, there's breakage, and they don't fully use their credit card points. So that's why we've pushed just get a big Bitcoin rewards back card, because you're actually going to be stacking Bitcoin. And I think it's a really good. I used to work for a Visa portfolio company, and so it's all these little microtransactions where they're just racking up fees every single day, and it hurts consumers because the C store down the street, there's just an American that's just trying to run a small business. They got to pay 3% more, so they're going to push it back to you. And people, I think, don't fully grasp how that tax over time 3% does drive the 5 to 7% we see now. And let's dive into Truflation and how that 3 to 5% that Jerome Powell tells us isn't the right number.
I mean, the number that that we're being told is inflation. No, I mean, we don't think it's the right number. We aggregate over 30 million items for the US alone, and from some 70 different data providers. And we pull them through APIs, we pull them through licensed subscriptions to data feeds, through point of sale solutions, which scan barcodes on the product so we can see the size of the product, we can see the price, the description of the product, as well as then correlate that to the price that product is being charged at that specific unit or outlet. And so those are all the ways we aggregate the data, and we're saying it's below 1%. Yeah, that's really, and we've been below 1% for quite a while now. We were down at 0.68%, and then it because it's daily, we don't get all our data sets every single day. Some data sets we get once a week, some we get once every 2 weeks. And then other items, gas prices, we obviously get every single day. So it varies between the units, but then we have to correlate those, align them, bring them into the same format, clean them up, and then bring them to the market. And right now, I think we're at 0.9%. That's sort of inflation. And bear in mind, this is year on year. So this is looking at 1 year ago today. We're not looking at the last 5 years, because if you look at the last 5 years, we've experienced some 30% inflation, right? And that's what we feel. And when we complain about the cost of goods, our cost of living shooting up, that's what we're complaining about, that those last 5 years.
Do you guys do what the Biden administration used to do, and every single CPI, they'd have a revision, 6 weeks later or a couple months later? That was like one of the things when I was doing a stock podcast, we'd always talk about, and like, these job numbers are bullshit. Half of the people are just Uber drivers or whatnot. So how are you guys factoring in the astronomical changes too, not only from COVID, but now we're in this AI field, right? Where, if you read anything, there was a big paper, blanking on the guy's name, Matt something. And then I just saw another one and by Andrew, blanking on his name now too. To be fair, I'm a little sick right now if you guys can't see. But talking about just like with AI and these kids graduating college, a lot of these early stage jobs, they have a $200,000, $150,000 that they owe to the school. Now they're going to come into the working world, and there's going to be a lot, no jobs for these folks. So like, what are you guys factoring in, or how are you taking a look at that? Maybe personal on what you think that will do to inflation when people can't pay off their credit cards now, or they can't pay their debt on schools. Like, is that number just going to continue to rise, or what does that look like for you?
I mean, a couple of things there, right? I mean, so what we realized is the revisions and the continuous revisions that the Bureau of Lagging Statistics were doing. And so we just didn't want that. And coming with, when we first launched, right, how do we provide transparency in the calculation? How do we provide immutability so we're held accountable for the number that we publish, and that you can go back and track that? And if there is a revision, build a separate strand so that you can then identify on that new strand what the new rates are, but you're at least locked into what you committed to, and then you can see deviation. I mean, in some cases, numbers do come in later, and so you do then have to sort of deal with that. And in cases you want to take that into account, then take that into account on a different calculation stream. So what did we do with that? We built an infrastructure that was a blockchain, however, purpose-built for data. And so we took, what is the number one architecture for data? It's databases. And so we built a database-centric, not ledger-centric, database-centric, SQL-based blockchain. We worked with a company out of Austin called Quill, which we since have integrated into Truflation, and they are now a part of Truflation. But Quill was a team of 6 individuals that were SQL tuned and highly focused on building smart contract capability, consensus algorithm, bridging, an explorer. So now we have all of the features that you're used to from a Bitcoin or from a blockchain. Now you have that available for data. You can trace every single source of data on the Truth network or on our blockchain. And so we've built that around the Truflation calculation. So those were all things that we felt were necessary. And today we are finally sort of at a stage where this is now live and working and really battle tested as well, which is really where we wanted to get to. To your second question around students and universities and graduates and AI and growth, we look at this very much like the internet, right? When the internet came about, and everybody does analogies, but what the internet was, everybody was worried about. I mean, there was so many books were written about, oh, your jobs are going to get stolen by the internet. You know, everybody can now be a lawyer. The whole internet can do that for you. And we've just seen these constant evolutions that have taken place. You know, we walk around now with a computer in our hand. We don't really need a desktop anymore. And all of that capability you have on a mobile today. What does that mean? The universities have done a really bad job in preparing graduates for the real world. And they've, the debt and the cost of these universities, I think you look at the latest studies, you look at the administrative costs associated with universities, they've skyrocketed compared to the actual educational cost and the preparation that is needed in order to get into the workforce, how to manage that, how to juggle that. And I think the best way is getting experience. What employers look for is people with experience that are actually going to try, that actually make good decisions, but make decisions, right? Not just procrastinate and wait for others to make the decision, but you've got to make decisions, and you make mistakes when you do decisions.
On that point, for our audience, I mean, would love to get your take right now. I think I was reading yesterday, more of the CS computer science grads are dropping out of that major across universities in the United States because they're like, Claude is cooked me. Not Claude isn't cooked, but it's cooked me as a CS grad. Like, I am not going to get paid as much coding. And the thing is, the reality is, you're going to need a lot of engineers to fix and understand bugs and hallucinations, and there needs to be a lot around that, but it just might be a smaller number, and people might pay less for those services because there's a larger workforce out of work because Claude is doing so much of it. So getting to your point and boiling that down is, you see a shift and a need for right now, our audience that's young and hasn't chosen a career path, or maybe they're in a career and it's going to get replaced, is entrepreneurship, creativity, figuring out how to make money on some idea. Like, what's your idea as an entrepreneur on getting 0 to 1 if you've not had any experience and you see Claude taking your future career prospects?
Yeah, I mean, I don't really see it like that. I mean, I've got 4 kids. 2 of them are graduating from college this year, another one next year. They've all, every summer, they've taken internships in data, in marketing, in psychology, right? So they're really, or in fashion, in creative industries where they can actually go in development, startups, right? So every startup needs somebody to help hold their hand or just take initiative. And so if you just take initiative, that's the number one criteria, take initiative. If you feel there's something, and with all these AI tools now, you have everything at your doorstep. Download Claude and then just go and install it, play around with it, build your own environment around it. And everything is data centric, right? So you're going to need to interpret data. How can you leverage and play around with these tools that are available there to interpret data in a way where you take the initiative, you have a gut instinct, you have a feel that data is going to tell me this, or I'm going to bet on that. then, or, this is what's going to happen. Just play around, use the data, find the data. With MCP servers out there, you have access to all the data. You have now the agents to process that data and now make your thesis and build using that data, using those agents, build on that thesis, and then, execute on that. You can do that now, and you can do that very quickly. And all you need to do is test it and validate it. That's where you still need people. You still need humans. The prompting in, the editing, vibe coding is great, but it's not the solution. It doesn't scale. Everybody can vibe code something really fast, and you get immediate customer feedback. Wow, we're onto something here, but does it scale? Is it secure? Is it enterprise grade? Whatever enterprise grade means, but is it your Bitcoin? Are you going to give your Bitcoin to a bot until it's been battle tested, it's gone through security audits, et cetera? Those are all things that still require a level of engagement. And I believe that unit costs are going to come down, which are going to create and allow us as humans to pursue purpose and no longer do the task. We will have agents do the task, and we can focus on the actual purpose of what we want to do on this planet and whatever our passion is.
Do you think, and not to spend so much time here on AI, but do you think some of these agents are going to take those roles of a junior analyst, for example? Right now, there's going to be mid-level managers and directors, and the higher up you go, feels like the safer from everything I've been reading. Right. I think there's, they have to justify these $500 billion invested or whatever, that they've done now. But it is interesting to see, kind of like, I just did this the other day where I took a picture of myself after I worked out, and I was like, all right, what do I analyze my body and tell me exactly where I need to improve on? And it was pretty fucking cool. Like it went through my entire body. It was like your deltoids need work to get that V shape. And it gave me the exact workouts, what to do. And so I'm going to be dropping that app at some point. But do you think, just with as it goes through and the speed of innovation, I don't know if you saw that, there's a tweet out there with China's robots in 2025 to China's robots in 2026 and what they're looking at and the advancements they've made. It's pretty scary. And you think about, Tesla, they're no longer a car company, and they've never really been a car company, but now they're getting into robotics. You pair that with AI. I do see a world in which there will be less jobs for folks. And in every technological advancement, there's been, actually remember I wrote an email to Seth Godin. I don't know if you know who he is, but I had this theory called the toll booth theory I made up when I was 25 or something. And it was the first time I saw, something automated was with the toll booths. Those guys lost their jobs. That was automated. And I was like, okay, this is the pinnacle. This is the start of all of that. So as you go through it and you see the capabilities, we're a small team. We're not going to probably ever scale to 50 people. But with your own, you're seeing Truflation. Do you guys, feel the need where each individual is now maybe still working even longer? I've heard that people are working longer. But for your hiring plans, do you feel the need to go out and, scale this out very quickly and have bodies in seats? Or are you seeing within your own brand that you're able to use AI to take, potential jobs from 3 people or so?
Yeah, we're using AI heavily, right? We are data. We use AI across the supply chain of data, from ingestion all the way through consumption. And our goal is to get as many people to consume our data sets. And if you compare Truflation to the Bureau of Lagging Statistics, we're not 800, 800 people strong. We're not $1 billion in budget. We're a tiny team of 13 people, 15 people now, and we're decentralized. We've built a decentralized infrastructure that anybody can ramp up and get involved and use the data. We've just had 3 other developers build on top of the Truflation network, accessing our SDKs and trying to build prediction markets off the front of it, build a futures or build options associated with the Truflation feeds, things like that. So we're seeing new jobs get created that we didn't know about in the past. And yeah, sure, people don't work at toll booths anymore. That's been automated. But now they're working on YouTube channels. They're trying to educate. We're building, the educational system is broken. We've realized that. So where do you go to learn? I'm going to YouTube. I'm learning on YouTube, right? I've got more content on YouTube on how to fix this little thing, that little thing, or build using Claudebot, build out this, connect these two solutions, right? So we never had, 10 years ago when the internet first came around, we didn't even have YouTube, right? We didn't even know what video online was. YouTube came about in the mid 2000s or something, right?
I think,
go ahead, Joe.
I was going to say, like last night, it's like 1:40 a.m. and I'm wrapping up like 2 hours of connecting like a new MCP server and API to Claudebot or OpenClaw or our friend Claudius, who we're talking about more and more. And you're like, oh, it's a Bitcoin show. But it is so, I think, fundamental to understand connecting the career side of it, your personal skill development. You're really becoming a manager. And I've learned, building a trading bot with OpenClaw is that you have to proactively in the early days of training just catch things until it's wrong. And it basically was going to do this big trade on Predix, this like prediction market built on Bitcoin. And it's like, okay, based on Bitcoin being 100K, we think this is undervalued. I'm like, no, Bitcoin's not at 100K. It's at 68 and I see it every day and it hurts. It is not. That is a horrible assumption. And you really have to dig in like you would as a manager. And you as you being a CEO is like, that's the stuff that we hope people can take out of this, is taking your personal experience as a CEO, be like, hey, go learn from what Stefan's done managing a real team, take that learning and then put it towards your bot. So yes, you can do, like, the APIs are great and data feeds are, the core infrastructure, but you as the owner and the manager of this team of agents that you're building, you need to learn how to, be precise with your instructions, hold them accountable for what they're doing, making sure they, follow through on it. If not, put up processes in place. And these are all management, techniques and tactics that have been around that you're not taught in school necessarily. So I'm hoping that we figure out a better way to teach the next generation. This is how you manage an AI. And here's all the management books, that you can source into to do that.
Yeah, I just come back to your example, David, earlier, where you look at your wellness app, right? So if I look at how can I use AI to improve on the wellness side, let's say I'm a personal trainer. Oh man, my job's gone. I don't have any clients anymore because they're all using AI. No, your job has changed. Your job is no longer spending 1 hour preparing a program for yourself. It's like AI will prepare the program. I'm here to fine tune, make sure you're doing the right muscles, make sure you're not, doing deadlifts wrong, right? So you're not going to injure your back. You're doing it slowly. You're going up slowly. You're breathing in when you're doing. So the actual purpose is to actually create more efficiency in the output and not spend all your time doing the research. Okay, what programs do I need to do? The AI can actually do the task. Over time, maybe videos will start replacing me. There'll be a robot doing and telling me that on how to do it. But then there'll be something else coming around. I need to train the robot. I need to, or I don't know what it will be, but there will always be, I think, elements of where we want robots, and sometimes we won't want a robot there. We'll want a human to interact with.
Yeah, let's switch gears. I got some big news, not breaking anymore, but Kevin Warsh just got nominated to replace Powell in May. He's called for a regime change at the Fed, argued in the Wall Street Journal inflation is a choice, recently said tariffs won't cause inflation to spike because AI and productivity gains can absorb it. Meanwhile, Truflation is showing, you said it's a little higher than the 0.68 that we had on the screen, but BLS was saying 2.4. So if Warsh actually believes inflation is lower than the official data suggests, and your now new advisor, I believe, EJ Antoni, is potentially going to run the BLS, the Bureau of Laggings, as you say, which is hilarious. Are we looking at it like a complete reset of how inflation gets measured? And will, EJ Antonio with Trump's ear now will kind of change how the Fed responds to it, you think?
Yeah, I can't really speak to the government and the existing administration. We just felt that there is this, we're trying to pave a way where we can see a new way, if everything is going to rely on data, then how do we get the right and data to the table so that we can actually make the decisions that we need to around interest rates, right? And at $37 trillion in debt, interest rates matter, right? They layer on a huge cost of capital. And I think with Warsh coming in, he's going to have a very different approach on how he thinks the Fed needs to operate in such an environment. Does it need to really dictate the cost of capital, or should the market dictate the cost of capital? Where if I'm going to lend money for 10 years, what should the yield be that I get on that capital for 10 years? And how does that compare to other risk assets, currencies, economies, etc.? And that is me as a capital provider. It's up to me as a capital provider to make that decision. And I think that's ultimately my interpretation of where Warsh is going to go. I mean, he's still got a board. There's the FOMC board, right? And so he's not going to be the only person on that board. There's still going to be constituents on the board. And I think whereby Jerome Powell steps down as the chairperson, he may still reside and be on the board.
Yeah.
So he may not just be gone, right? He may still be there and stirring the pot a little bit while he's there.
You bring up a really good point of here's why you should care. Here's why the average person that they know about the debt, or hopefully more of them know about the debt. Interest rates, if they're, getting a mortgage, it makes sense. Like they're looking at the numbers more. The average American doesn't look like if there's not like a big life event, going, they hear it in the news. But the thing is, if you have trillions and trillions of debt, that like every tiny percentage point matters. Like people talk about basis points, and basis points aren't a big thing if you're buying a $5, hamburger or something like that. But you look at 37 trillion or whatever the number is, you look at the basis points there, that's massive impact. That's people like, getting their kids to college or programs to help the poor. And like, I think in both sides of the aisle, people like programs if they work and they lift people up and they get them jobs and they get them into the society and productive. And if you get the inflation data wrong on how you actually set that interest rate and how much you pay in debt, well, you can't afford any of that, or you're just adding to more debt. So I think more people need to understand the implications that, yes, it's a 0.98 or 0.78 number, but times 37 trillion is where you really get the scale of why more people need to know about this.
Yeah, I mean, we talked about credit card earlier on, right? What's the interest rate that you pay when you've got, even personally, you will feel a 30% interest rate on your credit card debt, right? And if that's 10 grand, 20 grand, right? That makes a lot every single month that you got to pay. And so that's just interest rates. And so if it comes down to 10%, we calculated that if Trump were to cap interest payments, you'd cap it at 10%. That would unlock $100 billion in the market based on the outstanding credit card debt.
Sounds nice, right?
Yeah.
What do you think the reality of that is? Because, Biden tried to wipe out education fee, the cost of education. And then, coming into midterms, I'm sure this news will pop back up and get people excited. I think he's done a relatively good job. I mean, a lot of people hate him if he has a mean tweet or something, but if you look at actually the policies, it's been, I guess I'd say rather, pretty good. Do you think that's a reality that we could get 10% as the cap?
I don't know. Realistically, I think it's a great discussion point, right? It got us all talking about it and coming up with hypotheses associated with it. Yeah, and I think if you look at his history, I mean, with the big beautiful bill, he brought no tax on tips, so he's actually followed up on those promises. And I do think the capital markets will find a new balance in terms of if we're forced to stick with that 10%. I mean, the markets will just cut out middlemen, right? I mean, we're seeing that, and that actually plays into Bitcoins,
yeah.
And the blockchain and stable coins and digital currencies. much more because you're cutting out a lot of middlemen. By cutting out all these toll takers along the way, you've created efficiencies. And how inefficient is the credit market as it relates to credit card loans and credits, right? And who makes the big bulk of that spread on interest rates on capital, right? There's a whole industry that has been born out of that 20% capital.
Yeah.
Good.
And that industry is going to suffer.
Yeah. You got to, all the rent seekers, you got to kick them out. Question for our audience. And so since we're doing more on AI, so do you have, in the past 3 weeks, OpenClaw has blown up, Sam Altman, OpenAI this week, went out and hired Peter Steinberger, and it's a big shakeup, and he said, look, like, I wanted to work with Claude. I said, Claudebot, like, I named it Claudebot, and all I got from the Anthropic team was just legal letters that, were not too friendly. And then Sam Altman's like, oh, I need to catch up to Anthropic. I'm going to make a pretty aggressive move. Like, kudos to him. Sam Altman's running Y Combinator. He recognizes talent early, and you got to act soon to get into a seed check or seed round. So with you seeing this rise internally, what's that been like? Have you guys changed your docs, your APIs, like how people connect into Trueflation to adjust to this realm of new Vibe developers that is coming out, building their own little ecosystems? Like, what's been your reception been like?
Yeah, so I mean, SaaSpocalypse is here, right? So selling software as a service is changing, right? You can no longer sell software in a rigid form that is, suited to a product manager's desire to build a product and a marketeer's feel for how people should use the data. So how do you bring more, just think of all the photos you take on your iPhone, right? And just how is that data structured? It's not, nobody tags them anymore. In the old days, we always used to tag every single photo. It's Jack and Jill in this photo, and it's on the mountaintop, Utah, whatever, Park City, skiing, yada, yada. No longer do you get that. AI does all that work. Filter, find a picture, this backdrop, skiing with Jack and Jill in there, and here are the photos, go find it, right? Boom, it does it all automated. That is the world that we're going to be entering into. How do we make data available so that you can, number one, have recursive solutions around that, and then number two, you can have reliability in the source and the computation to acquire and utilize that data. And so we've done it with economic data, where we try to make all of that available through APIs. If you want it through a JSON, you pay a small little fee. We just want a little taxonomy. I don't want to charge you a lot of money for it. However, if you do want guaranteed uptime, if you are building a regime and investment strategies off the back of the data, how do we help you get it from a reliable source at reliable times and always uptime, right? And so those are then, so you're wrapping in more quality of services. You're wrapping around there, if you want to use the Trueflation trademark and you want to be able to leverage Trueflation in your go-to-market, then how do we help make that happen, right? And how do we allow you to then leverage the brand name and the recognition that we've built out, be a part of your go-to-market?
I got a question about tariffs, because I think a lot of people misunderstand these, right? Trueflation's shown, sub 1% inflation, as we mentioned. Businesses have absorbed 80% of those tariff costs in 2025. I saw that JP Morgan said that ratio potentially could flip to 20% this year, as the pre-tariff inventory is gone. Do you think Trueflation's picking up on those tariff pass-throughs yet, or do you think this number is going to spike astronomically once they catch up, or is that just clickbait for Wall Street Journal readers?
Yeah, we think it's clickbait for Wall Street Journal readers. We don't see tariffs really coming through. We saw everybody, all the elite, the economists, the educated, said tariffs were going to impact inflation and have a huge impact. We've seen nothing so far, right? And bear in mind, we're nearly a year in since we first floated the idea of tariffs. And okay, they took a while to have its impact. And actually, contrary to what the elites and all the studies are telling us, we're actually seeing less. The consumer is not going to bear any more. They can't handle any more costs, right? So what's coming down? Unit cost, food is coming down. Why? You go to the grocery stores 10 times a month. If you're going to feel the cost of food every single time you go there. And so how do I bring unit costs down on food is we create our own brands. So you're seeing all the grocery stores create their own brands. Costco, the best example, where they've got Kirkland and they've got an alternative brand, and that's what you get, right? And so things like that are beginning to happen. And so the unit costs again come down. You're also seeing tariffs, not in our view, being burdened by the importer, but actually it's shared across the value chain where the supply chain carries a bit. You then see the exporter carry a large portion of it to bring it across into the US. And so those are things that we're seeing. And if you believe the Central Bank of Central Bankers, the Bank of International Settlements, they did a report and study in global trade the fabric of global trade has never been stronger and higher than it is right now, right? And so we're seeing more trade happen as a result of this debate. It's changed the dynamics, and I think to the health of the global economy, but that's my personal opinion versus what the data says.
What do you feel like going into midterms? Do you feel that it's in the U.S. you're just going to have all of this crazy, stances, and like we're probably going to see this argument come up a lot? Tariffs, wrecked the middle class, and then like we need to, have a full new regime change, put in, a blue wave, and totally upset the current, movement that we're on. Do you feel like this is going to be the test of our going in, and like, will people, look at like Polymarket, which had such a big effect on the last election, or post-election, people started digesting, oh, this is why the French whale was right. He like went in and did these studies. I'm worried we're still in the middle of like this misinformation age of no one really knows where the truth is, but we're doing a lot of these tools like these prediction markets where people are finding the truth through actually putting skin in the game, or like you guys, if your Trueflation's outside of being politically motivated to get to the truth. But I feel like we're still in the middle. Like, what's your feeling going into midterms?
Yeah, I mean, sentiment is not there yet, right? I mean, sentiment is still very much, prices have gone up.
Yeah.
They're not deflationary. We're experiencing disinflation. And what does disinflation mean is the prices are not going up as fast as they did. That's all we're saying. But we still have inflation. Cost of goods are still going up, just way slower than they did in the first sort of half of this decade. And I don't think that sentiment is out of the market. And I think living on the numbers that we're living on now is not a way to communicate and market to the voting base. You have to actually, have a stronger emotional connection with that voter to realize that actually the cost is still up. Other than eggs and specific food items, we've seen actual deflation, right? It's gone from $8 down to $3 in the last year. And so that is deflation. And that's what needs to happen in order to really support a inflationary argument, right? Because I just think people don't understand that it's just year on year based on our experience in the market. And so that's on inflation specifically. I think the Epstein files are definitely, that's going to have a bigger impact on the midterms. That emotional leak and just the way it's being handled, I think is definitely going to have an impact. And bear in mind, this has been ongoing since 2000 and something, right? I mean, so this is over 15 years of just horrendous, scary shit. I mean, excuse my language, but that's really, it's super scary what's been going on for that long. How did that happen?
It's I've been a victim of scrolling, reading through some of those Epstein files, and it is, we won't spend too much time on them because it is crazy. I mean, like, people are protesting in the streets, but not about people like God forbid, like eating babies. I don't, so we won't go down that whole rabbit hole, but that is like some of the craziest shit I've read, where people don't seem to like care. I wonder, will there be any arrests from this? Like, that's a whole topic, but yeah, it is pretty fascinating. But
talking about vibe coding and AI, by the way, I have to bring this up, right? An open source developer just pulled all the files and built an open source social graph.
I saw that. That's what I was going to try to pull up.
Yeah.
Pull it up. I want to see it.
All right, let me pull this up. I did like
it. You can put in any Bitcoin, and what is the sort of, how many times did he mention it in emails, and who did they go to? You get this whole social graph. I mean, it's pretty amazing. Yeah, it's really, there you go.
I saw this right before I popped on, and I knew exactly what you were talking about. This is
is that Amjad?
Elja Boom at least tweeted about it.
Oh, yeah,
from Amjad maybe made it.
Founder of Replit.
Smart. Yeah, okay. Yeah, I mean, people are getting smart. It's like these independent journalists. I mean, you saw what happened. I'm from Minnesota, so that was front and center for us. But yeah, I mean, everything that's going on right now with the fraud, see how that all shakes out and everything. To kind of wrap this up and switching gears somewhat back to Bitcoin and equities. I saw Goldman's expecting some cuts now in March and June. What do you think that setup means? And we also got like Iran. I just did some research before. Bitcoin tends to go down quickly and then ramps back up 30% the last few, I guess, military situations that were going on. What do you think this means, in the future? What is your prediction here, I guess, for 2026? Do you think Bitcoin is going to go higher? You think we go lower first and then rocket back up? Curious what your thoughts on, if we do get more rate cuts, what this means for equities and for Bitcoin.
So unfortunately, risk, Bitcoin in the broader sense of the economy is viewed as a risk-on asset. It's too volatile for most people, and ultimately, whether you like logic or not, a lot of people just have real negative sentiment towards Bitcoin, and it's considered risk on. And if you look right now, you take Truflation and you take the yield, the US dollar yield, and you Truflation adjust it. So, and you look at the real yield, which is what it means. Real yield is high, and people with a lot of money, all they care about is 2 to 3% APY, right? They don't want 100% APY all in, leverage up, perp trading. They just want, 3% APY. That does it, right? And so if they get 3% on $100 million, it's feeding the ecosystem and the industry that they need. And so what does that mean? That means take money off the table, put it into solid risk-free assets. And unfortunately, bonds still, dollar T-bills are still sort of risk-free. And the dollar is going up as a result. We saw Dixie's move up a little bit. And basically using Truflation, you have a great tool to do that, right? But Bitcoin's been coming down as a result. So people are looking at AI's come down. Why? It's risk. It's risky. We don't know where it's going yet, and so people don't like that underlying risk element. Long term, though, I don't understand it. Why is gold at $40 trillion? Right? I just don't understand why gold. I can't. All you get is a piece of paper confirming that you have the gold in somebody's custody somewhere on the planet.
Fort Knox, right? That's where it's. That's something I always say is like, you're not actually. No one's actually holding the gold unless you're, a nation state, right? And so that's faker than Bitcoin, which we always talk about, right? You can have $1 billion on a flash drive, right, and leave the country if you needed to. So my guess is that just not enough people have learned about Bitcoin. And once they have that realization that, hey, gold is just as, if they want to call Bitcoin fake, gold is just as fake. You go to Fort Knox, that story died really quick when they started to look into Fort Knox. We'll see if that pops up again. But people kind of kept their mouths shut after, that Elon Musk tweeted it and then haven't heard a thing from it since, so.
But I think to your point, I mean, my view is Bitcoin long term is there's only one way it's going to go up, right? And it's take whatever you can do is just buy as little as you possibly can, put it on a ledger every single month or every 2 weeks. Just buy a little bit, a tiny little bit, even if it's $10, $100.
I do $250 a week.
Yeah, there you go. Whatever you can afford, and then just put it on a ledger. Take it out of the system. Don't give it to BlackRock or other institutions that are going to custody it and then leverage up and then build futures off the back of it. And then we're going to be trading futures. And then we're in the same situation where silver is, where, in China, they're trading silver that's supposedly asset backed. And then we're trading in Chicago, we're trading silver futures, and which is not asset backed accordingly. And that's why we see a big arbitrage between the different silver prices.
Mm-hmm.
I mean, big in industrial terms, it's huge, right? But actually, if you just look at it, it's like, as a unit cost, it might not seem that much, but it is actually a significant arbitrage.
Mm-hmm. Stefan, amazing having you on. Anything, we got about a couple minutes left here. Anything we missed here? I know we skipped over a few of the questions we had planned here, but what would you leave our audience with if you have kind of the parting words here?
Yeah, I mean, I think the money printer will go on. We will see money printing around the world. There will be more capital moving into the market. Assets will appreciate. And I think interest rates will come down this year. The economy's strong. Growth is going to be thriving. We've got new technologies. There's a lot of opportunity as the market is going through so much turmoil. There's a lot of opportunity. Don't be nervous. Try and identify those opportunities. And if you're young, what do you got to lose? Just go for it. It's a lot of hard work, but it can be gratifying and rewarding. But the beauty now is you can test very quickly and validate your thesis immediately, which is beautiful. So I think the economy is actually presenting a lot of interesting opportunities, a lot of hope, and pursue it. There's lots of new and as regulators unlock the regulatory barriers that we have today. We've got to allow people to pursue, take risk again, right? We've had such an older generation that is fearful of any new opportunity, that have stuck in, do it. I mean, I don't know. I was just watching Aviator the other day. It's like you see Howard Hughes go and crash planes in LA, land a plane on a golf course, right? Or sort of crash in Beverly Hills. He's, so, I mean, he took a lot of risk. It was dangerous, but he risked his life to actually try and make these planes come to life. And, how do we unlock more of that capital? Because ultimately it led to us flying around the world and using airplanes to connect with each other. Are we going to go to space? Are we going to build data centers in space? Yeah. Are we going to go to Mars? I don't know. I may not want to do that. You may not want to do that. But there sure as hell is going to be another Christopher Columbus that will want to go and do that and say the Earth is not flat. It goes around the world, right? And so somebody wants to go and explore and an adventure. Let them at it. Why stop them?
Yeah, my funny story, my dad had to land in a subdivision one time in a very small plane, and that was the last time my mom rode with my dad, which was probably 36 years ago. But Stefan, it's been amazing having you on. Love the passion. Also, as a father of four, it's good just to be, really talking about how to set them up for the future, how to start coaching them on what options are available. Don't make the decision for them, but let them know what decisions could lead to good outcomes, and then let them choose it. So love that on for our audience on that side, and we'll have to have you back soon.
Yeah, no, we live in a world of abundance. Take advantage of it. Don't let these limitations, restrict you from pursuing your passion. And, it's not always pursuing your passion, but it's just being able to meet people out there that share a level of interest, and you know, it's really who you meet in the world that really are going to open doors and new channels for you, and go out there. And the best way to do it is constantly test your thesis.
Mm-hmm. Optimism wins. You know, it's very easy to go doom scroll for hours and think the world's ending, but optimism prevails every single time. So, Stefan, appreciate you coming on. We got another guest here in 5 minutes for everyone watching at home. Going to be coming back with Problem Sniper and talking about stock options. But Stefan, we'll definitely have to have you back on. Feel free to listen in, and we'll talk again.
Thank you. Thank you for having me, and have a great rest of the day.
Thanks, everyone.
Bye, guys.
Welcome back. Let's get Problem Sniper to the stage. We got Josiah. Now he's back on the stage. Oh, there we go. There we go. Coming back from lunch here, trying to get everything sorted here. How are we feeling, KT?
Oh, pretty good, man. I think the market is correcting through time. I think they are just trying to, you know, like there's a lot of volatility and a lot of noise in the market right now, and people are trying to. I mean, and the market is trying to understand where the next move is, and that's where I think there's a lot of back and forth. And that's what is annoying most people too. Like I think people missed out on the rally. They are waiting for the dip. The dip is not happening. It's not breaking out. People are just concerned about what's happening in the market, and it's been 4 months. So I understand the frustration.
Well, we just talked to the founder of Trueflation. He's bringing on a new advisor that's pretty close to the Trump administration. So CPI could be changing potentially. We got a new Fed chair coming in with Kevin Warsh as well. So some people are looking at that. We got Iran as well. I saw some missiles testing this morning. We've sent a bunch of troops and military over there with our Navy, et cetera. And so I think, as always, it feels like there's always something, right? And so not sure what you're thinking is kind of your big picture macro view. Is all eyes on the Fed still like we have been the past few years, or are you looking at this AI boom with Iran and AI boom / then Iran as well? How are you taking a look at everything moving forward?
I mean, the way I look at it, I think there's no bullish news or bearish news per se in either situation. Like we attack Iran, and then we have all that oil, right? So is it bullish or bearish? Like I would say it's bullish. I mean, someone can always argue the counter to that as well. But I always look at the war scenario that comes up as a bullish scenario for the stock market per se. I mean, obviously there's a lot of lives at stake and things like that. I understand all that from the humanitarian perspective, but then when it comes to the stock market, it's always bullish. The way I look at all the news per se, like let it be the Fed, let it be Iran, let it be something else, it's all about how much the market knows and how much the market is trying to price in. If the market knows something, it's a certainty, and that's where the volatility goes down from the market, and the market tries to or tends to price it into the price, and we will find buyers at a particular point, and then we can start to grind higher or lower based on whatever the market thinks in the short term, but in the long term it's always going to go higher. So it's all about certainty. I don't really give much attention to the short term fluctuations when you're thinking about stocks like Amazon, like Google, like Tesla, all of that, right? Like Tesla, I just heard the news that their first cybercab rolled out of the Giga Texas, right? Like when you think about all of that, the AI boom is real. AI is all through my feed on over the weekend. It was all about PLTR, PLTR, PLTR.
Michael Burry.
Sure. Yeah, exactly. He's been pounding on it to say it's going to go down. Obviously, I think when I started coming on 21 Rates, also the podcast, I think I said this back in 2025. PLTR CEO himself said not all of their AI investments are going to be fruitful in 2026, and we see that in the price. Like they've been $200 stock, now it's 120, 125. Obviously he knows what he talked about, and most of these companies also have invested heavily into AI, trying to be the first ones into the technology space, grabbing customers, getting that revenue share, being all of that, right? So that's exactly what we're trying to see in all these smaller companies too. Like there's that panic that everybody is super invested in AI. What is the return? Like we saw that with Amazon earnings as well. 200 billion capex. Where is the return? Where is that we are going to see the return on this investment? So that's essentially what the market is trying to figure out right now. That is what is the uncertainty in the market right now. Once market figures it out, everything goes right back up.
don't know if you saw that. I was trying to pull up this video of robots talking about Tesla and Amazon with the CapEx. Here, let me just play this real quick because this is pretty wild.
Chinese robots.
One that was that actually went back and forth, showing the difference from 2025 to 2026 robots. But take a look at this real quick. It's coming out of China. These are it's not AI.
I saw this whole thing on YouTube. It's insane.
I won't play the whole thing. But yeah, it's absolutely phenomenal what they're doing here. And just like, again, seeing from 2025 to 2026, you think of these stocks like Tesla, Amazon, they're putting that CapEx. I wrote a tweet about it. I think it's crazy that they dropped on that news because these companies have to innovate, especially Amazon, who's been relatively like, I think it's up only 30% or something in the past 5 years, right? So you think Amazon's this massive, massive company, but it hasn't been performing nearly like some of these other companies right now. So I'm very bullish AI. Obviously, I'm bullish, robots, and that's just, I think, the reality of what we're going to see coming into that first stock with Costco. I just was reading this article talking about how Costco could be a huge beneficiary of AI as, potential jobs are lost. People don't have enough savings. They're going to start going to like the Dollar Tree. They're going to be starting to go to Costco. Costco, I was just looking at, I think it's slightly down today.
Slightly down,
it's
yeah.
Basically flat. Down $1. So what are we taking a look at here with Costco? I know it's been a stock we've looked at the past few weeks. Anything new that you're keeping an eye on, or what numbers are you looking at to enter that trade?
Yeah, so Costco, I think it's very well positioned here on the chart to go back to the all-time highs around 1066. Absolutely insane, very nice looking chart. Like, once we broke down of that huge, massive trend line. I'll also talk about one of the stock that's doing the same thing right now, but obviously it does not have the consumer base or the recurrent revenue that like how Costco does, but it's very close to hitting that all-time highs. I think 1200 is something that Costco can go up to this year. Look at Walmart, for example, like just the two scenarios that you just talked about, loss of jobs, people going to Dollar Trees and all the other stores where there is value for money on the products that they sell. Even though I know they are not the best of the best quality per se, like Dollar Tree and stuff, but whatever people can afford to buy is what they'll go after at some point. So loss of jobs and things like that in the short-term pain, I think the retailers are definitely going to benefit out of it. The XLP space has been a little bit stronger than the rest of the market. So here I'm looking at this 1020 level. Next, very fast, quick move towards 1050 is what I'm expecting once we break that 1020 with conviction. I probably think it'll happen today or this week. And all-time highs coming up very soon. Obviously, Costco is another stock that is ready to be split into 10:1 again. So that's exactly what I'm looking at Costco. But little segue there, I'm looking at the exact same kind of trend line coming up on this one here on Target. Look at that trend line there. Like it's
Great.
Yep. Yeah, it's trying to break out of that 117 level, and then while you have a very quick move towards that 126 to 131. I hope it's not a look below, look above and fail kind of setup. I've never touched or traded Target before, but that's another, like, it's a very it's a low hanging fruit, I would say, with respect in the retail space. They had a lot of hit because of the whole, their movement around LGBT.
Yeah, I was gonna say they got the Bud Light treatment for a while.
For a long time.
I'm from Minnesota. It's one of our biggest brands coming out of the Minnesota area. But so how for those that are not as like myself, I'll just say I'm not that good with charts. I'm all heart, as I say. What are we looking at here? So in terms of it broke out now, like, how do you draw this next trend line? Where does it go from here? And for people that are new to charting, how do you
I
draw
tend
them?
to I tend to take like clear support and resistance levels, and then you have gap fills. Once you have like a nice clean move above 117 or break above 117, I would say this gap to 120, 121 is going to get filled. You see this gap here.
Yeah.
But if something happens tomorrow and like we have a gap above 120, 121, it's going to be a very, very bullish chart because it creates this whole thing as an island bottom, and then you can be looking at 131 and 135 coming up very, very fast, right? Like you see, like I always look towards the left where there is all consolidations that you see. You see these consolidations here. You see bounces of that consolidation before. So 135 is probably going to be a major target. And if you're like buying shares or something like that, I always look at the weekly time frame. Weekly time frame gives you much clearer picture as to where you can look for as price targets where things have bounced. You can be it can be a very naive approach too. Like you see, there's a very sharp downtrend here, and then where did we bounce? It was somewhere around 138 on the chart, and then we bounced again. We came right back down to 138, 139 again, and we bounced right before we broke down that level there. So when we go retest that level, that's the level that's going to act as resistance, which will not be a free flow from there on if we do see a breakout over that 120 level here. So I would probably hold this chart till 135, 138, and then get out. That's how I kind of play it, and that's how I kind of like visualize your entries and exits when you're like playing when you're especially playing stock. You can always do something like that, and you can also draw trend lines on the weekly time frame, which is pretty easy to do as well, right? Like instead of like all the noise on the day-to-day candle, you see that it's a clear break that's happening here right now, and it is going to see somewhere around 126 to 130 pretty soon.
Mm-hmm. Along those same lines, we got Walmart. I know you wanted to touch on. Their earnings are tomorrow or the next day, I think.
Yeah, I think this week they have earnings. I'm not sure.
I'll pull that up to confirm.
Yeah.
Are you seeing the same thing here, though? I mean, looks like it popped off the line.
Exactly, right? Like this is the strongest XLP name that's out there, making all-time highs every single day since last couple of weeks. And there's a little bit of a fade today, but like after that massive run that it had, it's the same thing. Like XLP being strong, it's just a risk-off scenario in the market. So Costco, Target, Walmart, all of these are just heading higher. That's essentially what I see. And if they report bad earnings, I would probably see it dip all the way up to 120, where it's again a buy zone, and it'll pop right back up.
So the next one want to get into that's new, but it's seasonal. It's exciting. Netflix. So Netflix is what you tweeted out, your swing trade of March.
Yep.
So this is a choice. Like this is, something you're excited about. You're like, hey, like I'm gonna hold these positions through, I think, March 20th. 85 calls. They're around 80 cents to $1 right now. Full disclosure, I do hold these calls just because I follow Sniper. He's got good stuff. I'm like, sure, like let's ride this train together. Avi, I don't know. Like he's probably preparing for the stream this morning. I don't know.
I was trying to set up my new camera.
Yeah. You're probably doing work, but Sniper and I are also doing work by sitting on Netflix. Tell us about it. What are you excited about?
Oh,
well, this is the certainty I'm talking about when it comes to the stock, right? Like, firstly, I'll talk about that because we have the WBD news that's going to be there. I can argue as a bullish or bearish in that sense. Like bullish because they'll get all these rights for all these big MCUs, right? Like movies and things like that, and that characters can also be used for their long-term gaming pivot that Netflix has been talking about for quite some time, and things like that. But again, if you want to argue around the bearish angle of it, that's a lot of money that they're spending on a short-term sense, and like there is going to be some effort going into how they are going to deal with this acquisition once that comes in. Given Netflix, I trust it as a company being very efficient, and I think they'll do it very seamlessly. So for me, that's not a big concern at all. Secondly, why I'm interested in it right now is I think WBD has voting on how if they want to clear this acquisition with Netflix. That to me is a clarity that the market will get. And when there is clarity, there is less volatility, and the market can price Netflix the way it sees Netflix to be. And that's something that I believe will create the pop towards that 8250 or towards that trend line that I'm just showing you here, somewhere around the 85 zone. So that is essentially what I'm trying to target here on Netflix, given how oversold this RSI is also. And when did we see the RSI this oversold before? I think this was back in 2024. Actually, not even 2024. 2024 was even 30. I think this was 2022 is when I saw it that low. I just have to go all the way back. Here. You see this here is where we saw it all the way low. And like after that, obviously it's been there for some time where we also are seeing the same thing here. It's been here for some time, and after that it starts to ramp up, especially these ramp ups that are very, very fast. So that oversold RSI and the clarity in the news that's coming in, I just love it. There's good open interest on these strikes for hire on Netflix. There's a lot of put selling that's going on as well. Anybody I talk to in the hedge fund space or bigger retail investors, I would say, are very interested in adding Netflix into their portfolio as well at these prices. So why not? Give it a shot. We'll see where it lands.
I think you just pushed it closer to green here. It was at negative 0.09. Now it's at negative 0.01. The sniper effect is in full effect here. One that we haven't touched on, I don't think ever on this show, is Caterpillar. Caterpillar is really interesting. I was just looking this up too. With the big beautiful bill, 100% bonus depreciation is back, which allows them to buy everything right now and deduct the entire cost. So it used to be able to, like, over years. So now they can do it with this new big beautiful bill. They can do it right away. So that's massive from an expense standpoint. They have tons of infrastructure. I'm hopefully see this now come into fruition. But Trump during his first term said we'll make airports great again. You need Caterpillar for that, right? They are, from a defense standpoint, as well as like anything that needs big bulldozers or excavators. They are the American company to take a look at. They are somewhat tariff-proof because they are a net exporter versus importer as well. So there's a lot of things going very positive for them. I was trying to find like the bearish case. Could be that the bill doesn't actually 2.8 to 3.4 trillion added to the deficit over 10 years. If bond yields spike because of this, that makes borrowing more expensive potentially. But I see a lot of optimism here overall. But what are you seeing here on the charts? What do you like about CAT? Or
you also forgot one big thing, infrastructure built out for AI. That's where Caterpillar comes into. So if you're talking about a huge beneficiary of AI, Caterpillar is one of them.
What is the chart showing us?
The chart just shows right now we are on an inside day, which is just consolidation after a big run that it had. I'm seeing a nice little bull flag is how I see it. And once we see somewhere about 775, I think 800 is in the corner for Caterpillar to come pretty fast here on the chart.
What else did we have here that we wanted to touch on? Micron, SanDisk has been insane as well. Pull up those charts, Micron and SanDisk.
Was it Western Digital yesterday said they're tapped out for the year, and it's with all
I've heard so about memory. Like I think 2024 was my first tweet about how Samsung memory chips were up 1,000% year over year, and this was back in 2024 is when I first tweeted, and that's when Micron actually broke through the dot-com bubble high. And I was like, there's something going on with memory, guys. And then fast forward today, I'm hearing people are taking in like they're actually selling chips 3 years out. Like they're like, oh, you want chips 3 years from now? Give me the money right now and I'll put you on the list. That's how it is right now. And that's why I think there's going to be a huge ramp up in like how MU can go all the way up to 700. Again, for me especially, memory is not a long-term game. It's a cycle, and once the music stops, it just stops, right? Like there's nothing you can do about it. So as long as there's music, keep dancing, keep betting, keep betting it higher and higher and higher. But once it stops, it's just like SMCI. We were talking about this. It's a garbage company, but when it was going up, we were playing it up, right? So it is what it is, and that's what I'll be doing with MU. As long as it gets bid up, I will be playing it up, and I think it has a potential to move all the way up to 700 and then 1,000. Who knows when it happens, but as long as you see like every single dip, every single time there's a dip, there are buyers that prop it up by the end of the week. Then again, you have a dip at the start of the week, and then you have like huge buyers come in and prop it up to the highs. So inside day again today, I think once that 413 level breaks, we have last week's high at around 440 come up very soon here on MU. I like any kind of dip towards that 366 to 350. I will probably try to snipe back calls again. I think we played it last time here, went right back up. This was, I think we were talking about this also last week, that we were in that position. And the next day, calls opened from $3 at $17, so $17.60 or something. And I mean, it was a crazy good trade. And I think we are going to see something very similar again this week.
What are your thoughts on just memory overall? It sounds like long-term play. Every time there's opportunity, it invites competition, so do you think they get disrupted? I remember like being in my 20s and seeing, Boeing has demand and contracts 2 years out, but then not realizing when I was in my 20s, I didn't buy a bunch of Boeing at the time, didn't have the cash to do so, but realizing it's already priced in. Like everyone knew that, like, yes, Boeing can't keep up with demand. 2 years out, they have all these like planes they need to deliver on, but there's the operational inefficiencies, the regulatory, they're crashing 737 Maxes. There's a lot of skeletons in the closet. Probably not the best stock. Is this where you see just, yes, they might run, but memory doesn't have a technological moat? There's going to be people like NVIDIA that maybe do their own proprietary, or Intel, or, other AMD could even get in the game. Like, I'm not sure, but is that how you just see it, just not having a different?
Exactly how I see it. But the thing about the difference in what the example that you gave is what's happening right now is they're actually taking money for a product that's going to be delivered three years from now. Mm-hmm. So it shows up in current revenue, right? And people will obviously see that and be like, oh, there's huge demand now, and MU is making like $10 per share. They only guided up until like $5 or $6 right now, but then now they're showing $10, $12 a share. That's crazy. So there will be short-term demand for the stock.
The COVID pulled forward demand. I think the CEO is talking about that. Pulled forward demand for product, but then like they can't keep it going.
Yep, they can keep it going. Like that's exactly what memory cycle is. It's always like this. And I mean, like I said, I'm not bearish on the stock at all. But if you're like thinking about it, if it's at 700, you're going to go all in. Like I have known so many people go all in on SMCI when it was like 1,100 or something. I was like, guys, that's not what happens. Like, think about it. Like, play to the upside, play your options, whatever that is. But when the music stops, you don't hold on to that. Same thing with GME. Same thing with AMC. Like, once the music stops, it stops. That's it. Like, there's nothing you can do about it.
Even with like SanDisk, so up 163% on the year, but the last 12 months, 1,800% plus. Yep. So so like this is where I struggle, right? I saw NVIDIA just go straight up. And I'm like, no chart, no matter what the asset class is, goes on forever. And then I had to do a caveat, except for NVIDIA now with an asterisk, right? You don't think MU, I mean, that's still far from here. It'd be a double from here to get up basically to 700, 800. I heard from like Sam, Smarter Trader. He's very bullish. He's been, pounding the table, if you will, on SanDisk as well. Do you see these guys as parity overall? Just like, when the music stops for MU, music's going to stop for SanDisk. And when do you think that happens? Because AI is all you hear about now, right? And you need memory for that. We see it firsthand even. But one thing that could be interesting too, and I saw, I think it was like 80% of CEOs are doing this shift now to on-prem. So on-prem is going to be hot again. How does that play into these specific stocks, if at all? And if that comes into fruition, where 80% of Fortune 500 CEOs are saying that they're going to come back on-prem. Dell was one that I showed, and you said HP is even better. So I'd love for you to touch on that, because I thought that was fascinating. I using Claude, I found Dell, and I was like, dude, you're getting a Dell. Like, this is back in like the 90s, How do these companies, are they going to make an epic comeback, you think? Like SanDisk and MU, or you don't see it as popping as these other ones?
Well, I think the on-prem story has been going on for a little bit, because that's why we saw what SMCI did last year, what Dell did last year, and finally they basically broke down. Obviously, Dell pivoted into that racking business, just like how SMCI did, all these on-prem, whatever that is. Yes, Dell is a superior product right now because of their offerings with the hardware and the racking. But it's the same. Like, I have to do a little bit more research on this, Avi. Like, when you sent out that voice note to me, I was like, oh, this is interesting. And then I was sidetracked by a bunch of things after. But I basically think HP and Dell would be the top two picks that I would think about if that's the boom that we are going for. But how much of a spend that are these companies going to have? Shifting from the cloud to on-prem is a pain in the butt. So I've done it myself before, and it's extremely hard.
Yeah, I mean, that was one of my bear cases. So for my mini monster, I said I'd promise I'd bring a mini monster to the table. So I'll do an appetizer version today, and then we're actually going to bring a guy who's been like following this stock for quite some time. But NBIS. So it used to be Yandex, which is Russia's basically Google. Obviously, they had to ditch any Russian operations. They were reborn, headquartered in Amsterdam. But this revenue story is fucking insane, for lack of better words, right? They went from 91 million in 2024, 530 million in 2025. Now their guidance, and I just listened to their earnings call, is even higher than what these notes say. They said even $6 to $9 billion for 2026, which is insane. Now the bear case here is Microsoft and Meta is $20 billion of that, right?
Exactly.
That's already locked in. They've been sold out. They cannot build fast enough. But my fear is, if all these corporations do start to come back on-prem, Microsoft and Meta, the cloud's not going to matter as much. That being said, they're building out, several other angles. They don't sell the actual hardware you put in the office, but they are building out dedicated cloud setups to feel as if they're on-prem. So you own your GPUs, you own your own data. It's HIPAA SOC 2 compliant. But those revenue numbers of growth, I'm trying to remember the last company that I've seen grow that astronomically. My friend, I have a good buddy. I'll keep his name out of it, but he put his entire 401k into this. I told him he's crazy to do that with anything. But I don't know if you've checked this stock at all. It is one of the most interesting stocks that I've seen for a while. I got a decent chunk in there, but that was one of the things that scared me, is this, if Meta, if they're not going to be renewing their contracts, and the companies that use Meta, that use Microsoft, don't renew for as big, or if they're not scaling as fast, that any growth story gets killed right away as soon as that growth stops. Right. Yep. So what is the chart showing you? Not sure again if you've dug into this at all, but
this is actually my trade idea for the week. I always post like one trade idea, right? So it's actually like a nice clean falling wedge setup that's happening. Very nice strength in the stock last week, even after the dump that happened on Friday. You see that the stock was almost closing at the highs of the day. Now, like if this upper trend line breaks, it has that fast, quick move towards that 100, 115, 106 to 115, and after that, it's all-time highs. But definitely, infrastructure stocks have been showing quite a bit of strength. NBIS, Corwave, both of them, and the only competition that NBIS I kind of see for NBIS is Corwave, right? Like they are backed by Nvidia. That's the only reason to be a lot more bullish.
NBIS is too, but I don't think not as much. But NBIS is Nvidia has an investment in them.
Oh, Nvidia does? I didn't know that.
Yeah, invested $700 million via private placement in 2024. I'll probably get to this next week, but they just did an acquisition. They also have like investments in some other big companies. I'll try to pull that up here in a second, but they've invested in a bunch of companies that also, their valuations are way higher than when they initially did it. So they'll have some added value from those as well. So I don't know. I got to dig into it more, bring someone that knows it better than I do. But this stock to me, it's got a cool ticker symbol. I'm a big fan of the ticker symbols. But besides the ticker symbol, which is the AVI indicator, yeah, I mean, it just seems like one that those revenue numbers are insane. If they can continue to scale, in 2027, 2028, they turn profitable. Like those numbers are insane.
Yeah, multiple technicals are pointing bullish for NBIS. Like you see the 9 and 20 flip over. We are going near the trend line. The only concern is the drop off on the volume per se here. But once we get closer, that's where I'll be looking out on the 15-minute chart as to where the volume comes in. Inside day today, I think tomorrow might be the day we see a bigger ramp up on NBIS towards 106.
And then we are a Bitcoin show. So if you could pull up Bitcoin and tell us where you think that one's going. I did some research too, just with seeing the news this morning. We all woke up to, it felt like the market was going to puke off the Iran news, but it didn't. So basically, if people weren't paying attention to Twitter this morning, they started firing rockets in the Strait of Hermes. I'm going to mispronounce that. But anytime that happens, when there is some violence in the world, say it again.
Is it Hormuz?
Hormuz, probably. I also used to think Hermes was Hermes. My ex-girlfriend hated me for that. But yeah, so I mean, what I saw the data was it does drop anytime there is conflict. However, then the next couple months it bumps up, I think on average of 32%. So chart is looking pretty bearish right here. I mean, it's getting smoked. But I say Bitcoin's on sale. So can you help me feel good about this whole situation with Bitcoin?
Yeah, so right now we are at support. We talked about this last week or the week before. I think we again look towards the left. You had this consolidation that's happening here. That consolidation, I think that's what is the support that the market is trying to give. When you have like a very fast ramp ups like this, you see here, they don't offer supports. That's the reason why we have that trickle down also. Like we did see some consolidation here, so we did find some support, but then that was a bear flag. And we trickled down very fast because of no support here. But now we are in that consolidation mode from 2024, where we are like looking like we are finding some support there. But if there is a bigger drop, I would say 56 to 55 is where Bitcoin can go. And I would probably buy Bitcoin then. I mean, I'm not a buyer of Bitcoin, but at all right now, but averaging up, that's where I would buy it.
You said 55?
Yeah, 55, 56.
So just for the audience, mentally prepare yourself. Even if you're not hitting those levels, it is still very possible to hit the 50s.
I've heard 40 from a lot of people I know as well.
Yeah, 40 might not be possible as much, I think. Like this is a big consolidation zone. So yeah, even if we like dip towards like 55, 52-ish because of the volatility that Bitcoin goes through, it's still a buy. I don't see. I mean, like with Bitcoin, you just have to think long term.
I was just gonna
something
say.
that it's something that you want to pass down generations because nobody can track it. And there's you don't have to put it on an estate or anything at all. You can just pass it down generations without anybody tracking it. So
unless you're in France and then they expose all the data of people that have Bitcoin and you get wrench attacks, which is fucking crazy. Passive income says Bitcoin's going to 35. So hopefully passive income is incorrect there.
If we look at predicts right now, Bitcoin below 60K in 2026, I think it's a fair market, right? I think
poly market, I think it was at 51%.
51%. Okay.
Yeah, but they were at 51% when it was somewhere around 69, and that week it dropped under 60 for a little bit. 59,500. That's where it dropped to in that week.
And the definition here is it just has to wick down, right?
Yeah, so 1 minute candle predicts.
Wick.
Yeah, it just has to wick down. Yeah.
Yeah. So I think this is underpriced. I think it's a higher percentage. We get below 60.
Do it, Jodes. Buy
we already have. Claudius is already on it.
Oh, he's on it. All right.
Not in size. We're still working out the kinks with the Claude bot, but he's been in it for about a week. So
Predicts is very cool, by the way, KT. If you don't know, it's purely Bitcoin based. So it's very much similar to like the Poly Markets, Kelsies of the world, but everything is done in Bitcoin. So you win Bitcoin back. You put your predictions out there in Bitcoin. So we've been using this quite a bit, and they are a friend of the show. So definitely check that out. Anything else that we're missing as this camera angle corrects itself over time? There we go.
Nothing else for now. I'm just watching the market, see where FOMC leads us. I think IWM is also looking for the next move with the double inside day right now. A lot of compression.
Play from Fluid Trader this morning.
Oh, the 265, I guess.
5
that.
No, it's just a dabble. I don't know the IWM, but I thought it was interesting.
Yeah, it's a double inside day, so it'll either go to 267 or drop down to 255. Who knows?
Zero here, I think we talked about.
Yeah.
I was gonna say Bitcoin is the ultimate asset for the tried and true, not about timing the market, but time in the market.
Yep, I think that's what Saylor also says. Volatility on Bitcoin is your friend.
It is your friend. What are you looking forward to? I guess like historically, I was just thinking with like midterms coming up. When do we start to see that price? And usually markets are like 6 months ahead. So, some of these prediction markets see a blue wave coming through. How does that change anything? I know historically it's actually almost better for the stock market if the Congress is split. But what have you seen? Is that something you keep an eye on from a macro perspective, or?
I'll probably look at that from June or so.
Okay.
I think before that we have the Fed change coming in, and obviously the geopolitical risks. Once these kind of die down, I want to see where the market goes. But then when President Trump says Dow is going to 100,000, I'll believe him by the end of his term. So think about it long term. That's all I'll say.
Assets only go up. I love it. I love it. Joe, is anything you want to sign us off with for today? This is a new time, by the way. Tuesdays is going to be midweek market from now on.
I have to go with Lily. Last one. I have been a long-term holder for I think 15, 20 years. So I think GLP-1s have been a huge boon. How are you feeling right now? Do you think they continue to run? Are you concerned about any of the potential lawsuits from people pushing back? Do you think that's just obviously makes great headlines? People suing because of Ozempic or Wegovy or Manjaro. What's your feeling on them right now?
I think that the stock itself I think it's the first $1 trillion biopharma stock company. I mean, LLY, I think they have obviously the whole, the weight loss drug has been a huge hit for them. It's been one of the massive income streams for them. But how I see LLY is a long-term cancer play too. They have an amazing pipeline out there and might be one of those very initial companies to come out with close to a cancer drug is how I kind of see it.
Yeah.
So they have some great acquisitions also in the past, and like I think they have a great cancer drug pipeline coming in.
And that's one thing you see with like, okay, you can make a phenomenal meme using, the latest, like, I forget the name of it, but the latest like video model, the latest picture, image model, but really AI, I think will solve cancer. Like, and I think you agree with me, like AI will solve cancer. And just like data centers are needed right now, you do need good infrastructure to be able to produce drugs that AI comes up with. Say they invent a drug. Well, how do you get that to 8 billion people in the planet? So I totally agree. People need to look at that as like, who has the pharma infrastructure, which has to be even more tight, even more clean, even more regulated than a data center. You can't just spin it up in space. Like, people want to make sure, FDA is going to make sure, okay, these drugs are like consistent and clean and they're not going to kill people. So yeah, invest in not financial.
Big Pharma is going to have a word with you about that. They don't want to solve it, I don't think. We did have a request for hymns. I think Lily on Retta, I think it's a new GLP-1.
Mm-hmm.
I have a few friends that are super into a different form of daily stack.
Mm-hmm.
That they've been doing all these different things, but I think they own Retta, which has been like huge, and everyone's talking about these right now. So it is an interesting one. Along the same lines, the generic form of hymns, Mr. VS, we gotta give some love to our audience here. They're asking thoughts on hymns, please. Not sure if you've checked that. They've been dying off pretty bad from when I last looked, but I haven't looked at them for a bit.
This is my philosophy when I invest in any stock. I look at the stock and I see if it is replicatable, and like if the business can be replicatable by me per se, and if it seems too simple for me to replicate it, I'll always stay away from it. HIMS is that for me. Like, what is so special about HIMS that I have to get into I have to invest in HIMS, and I never invested in HIMS. I traded HIMS, never invested in it. I don't know, and like there's so much hype around certain tickers on FinTwit. I just don't get it. Why are you in it? They themselves don't have an explanation. They just like keep pounding at you with random things, and it is what it is.
I think people are looking for the opportunity cost of capital. Going back, shout out to Tony. He used to pound the table on that one. But yeah, I agree. Joey, shout out to Joey Salitro. He always says, KISS method. Keep it simple, stupid. Just buy the best company in the space. You don't need to think you're smarter than the markets are.
Exactly. Buy the best company in the space. That's it. Period.
So very cool. Well, if no one else has anything left, I've been going almost an hour here today with Problem Sniper, but we got him, I think, every week now moving forward on Tuesdays. So
yeah,
we'll let you know, but we're going to bring some other folks on too to dive into more of the fundamentals and looking at, trying to pull Joey over, trying to pull a few of the old friends from Pounding the Table back to the mix. But
gotta bring the mini monsters next time, Avi. We need the mini monsters next time.
Oh, I gave the start, the appetizer for NBIS,
and then
the full meal. I'm bringing a guy who pretty much only looks at NBIS, so I'm gonna try to bring him on next week, and we'll do mini monsters every week though. So that was like my favorite part.
Isn't a mini monster? It's too big now.
Well, yeah, fair enough. It's a average size monster, but we will find mini monsters. If people have ones that want us to take a look at, please feel free to shoot our DMs a visit, and we'll take a look there. But yeah, thanks everyone for tuning in. Check out 21rates.com. Check out /stack. We give away Bitcoin every single Friday. There's some fun games to play to also get free Bitcoin. So 21rates.com. Check that out.
Check out what he's doing at Problem Sniper as well. Yep. Follow him. He's got a great, trading community. So if you're new, you're trying to learn some, definitely follow what he's got going on. Check out at Problem Sniper. You'll be able to find the Discord.
Even though he's a friend, Jody still pays for it, so it's valuable. But always do your own research. Not investment advice.
1 micron trade from 3 to 17.
Well, we'll try to hit some big bangers later this year.
So check him out at Problem Sniper on Twitter. He's the man. He's one of the best to do it. So thanks for coming on. We will be back tomorrow. Jody, who do we got coming on for tomorrow?
We got Holston, obviously, just like we're locking in today. We got KT. Let's get some regular schedules, have you guys know what's coming up. So we have Holston coming on as my co-host on Wednesdays. I believe we have a CEO of Parfin starting out. So we're looking at banking infrastructure, a lot of modernization there, seeing how's the banking community going to push back on Bitcoin? Are they accepting it? And then we're diving into OpenClaw with Brad Mills. So been integrating a lot on my end. Brad Mills is, I think, even doing more than I am with Bitcoin and either trading bots or, automating your life. We're going to provide you with some good walkthroughs, hopefully some good takeaways on how everyone can suddenly have their own agent, either running their trades or at least improving your day to day.
We got to get Alex Finn on.
I've been hearing a lot about Clawbot. So
if anyone knows Alex Finn, introduce us. We'd love to bring him on. He's one of the best on Twitter talking about it. But we will see everyone back tomorrow. Thanks for tuning in. Thanks, KT. We're signing out.